Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is July 15th, 2012. Lots to talk about. Huge move on Friday, so let's get started. This is a chart of the SPY, which is the ETF that tracks the S&P 500. We had a move of 2.24 points higher. We actually gapped up and then increased higher. So I didn't really change any of the lines on the chart here because in the previous video I did say that because we didn't close below this bottom trend line here, there is a possibility that we may pop. That's exactly what we did, and we are still in this upper ascending triangle pattern. So just for all intensive argument purposes, I'm going to delete that bottom trend line there because it doesn't look like it has as much significance as these two trend lines here, so we have a better picture. I have two or three, I should say, mathematical calculations. I'm gonna pretty much bet that these two are probably gonna be the ones that we want to pay attention to, or at least the ones that I want to pay attention to, and that we may get priced into this area here before heading back down. And the reason why I say that is because next week, or starting tomorrow, which is Monday, will be the start of options expiration. Now, normally, before I get ahead of myself, I want to just say that you want to keep an eye on this volume here. You see how absolutely low this volume here? I mean, it's ridiculously low. That is 129 million traded, 129 million. That is the volume that we had on Friday. And I've been always saying that Mondays and Fridays are normally low volume. And when you have low volume such as that, it gives institutions enough time and probability of propping the markets higher. In addition to that, the middle of the week or the week before of the options expiration week, it starts getting a lot more volatile, and we're seeing that right now already happen. So being that this move, which is such a big move, 2024 cents up to the upside on the SPY, on such low volume, this is definitely telling me that this move isn't going to last very long. In the previous video, I also said that there is a possibility that the institutions, and if you just rewind and look at the previous video to this one, you I have a little bit more explanation, but basically in institutions, this is a head fake in my opinion. Institutions want people to jump into the market on the long side because everybody thinks that it's long, and in addition to that, we have this upper trend line here that everybody's probably expecting price to go. So would I chase this and go long right now? No, because the move has already happened and the move was much too large to consider a chase. Now, normally a big move like this, simply just like the move down and the move down over here and the move down over here, we normally get a 25% retracement. Okay, I should say, so this is going to be half, and this is a 25% retracement before possibly going higher, and hopefully this is higher into this 137 level. Now, in my opinion, I think this is a very good thing because it's setting up for another short, and that's what I've been waiting for. All my stocks that need to hit their resistance levels, I can now wait patiently for it to get hit before initiating another short. Now, this 137.74 level is the ultimate level. I probably will actually take a short a little earlier at this 137.06 level over there. So I don't see much more upside. I think towards the end of next week, say Thursday or Friday, if we can get into this level here, then I'll probably be initiating a short. Now, let's just say on Monday we boom, because Monday is low volume, we go straight into this 137.06 level. I'll probably shy away from taking a short simply because next week is options expiration, and you know, you just want to be very careful, and I want to wait for next week to pass by first before initiating a short. However, I also don't want to miss the train. So at the same time, if say Thursday on we hit into this resistance level here, not anytime earlier, but from Thursday on we hit this resistance level, then I'll probably be looking to short not only the market but other stocks that may be into the resistance levels now. Okay, so that's what I'm thinking in essence, or in short, and long story short, we basically traded. I can actually delete this line. This is overused and abused already. Let me save this drawing set here. So we're trading within this rising wedge pattern, this ascending triangle, whichever way you want to call it. Eventually, when you have a rising triangle or ascending triangle here, you normally get a breakdown, and the question is, when is it going to break down, right? I think it's ready and priming up to break down very soon. We showed a lot of weakness here when it broke down from this bottom trend line here. The institutions were definitely able to recover because of the volume. I say the institutions have the ability to probably push it up around here before coming back down. And again, we just have to take it by day day by day. Timing is everything. We need to make sure that it gets up here not too early, because if it gets there too early, then there's a possibility that we may actually tag this upper trend line here before initiating a short. So that's just my opinion, and something that you want to watch out for. These two levels held up pretty good. I'll probably be taking that off the chart already because it's already been used and abused, and I don't like using support and resistance lines more than once. Okay, so that is my opinion. That's how I see it right now. So let's take a look at the dollar. Alright, this is the chart of the UUP. Alright, so here's the thing about the dollar. Remember in the previous video I said, okay, so the dollar broke up past this upper trend line, was not able to close below this upper trend line here. Again, anytime you break out of the level, you need to confirm, but with a close above the previous candle. We did not get that, and sure enough, we come straight down. Okay, so we're gonna have some support right around this level at this 2280 level. So that's definitely something you want to keep an eye on. Why? We have this pivot point here. We have this calculated level here. We also have this upper rising trend line up here, just like that. Okay, and then we also have a gap window and a pivot point up there, as well as another gap window over here. So actually, this is a gap fill from this gap over here, and then this is a gap window from the gap over here. So this is going to be pretty good support in my opinion before we get a bounce in the dollar and head higher. Let's take a look at the DX. Right, this is the chart of the DX. This is also the US dollar. I have a target here at 85.23 still. Okay, so now this candle here, don't pay attention to this one. This is after hours, but same like the UUP, we broke out of this double top level here, which is great. Unfortunately, we did not close the next day above this candle, which would have validated this move, but it did not. Therefore, it was able to break down past this calculated move again. So I'm expecting some support around this level here at the 20 moving average and this pivot point over here, which should give pretty good support. I have not made a calculation yet, the mathematically calculated level yet for the DX, but as it stands, I do not think right now that this US dollar is in any type of weakness. You have a low here, we have a higher low, we have a higher low up here, and we have a high, and we made another higher high just recently here, which means the dollar is still in relative strength. Okay, it is still in an uptrend. It's also above all the moving averages. Okay. Alright, this is the weekly chart of the US dollar. Let me just delete all the drawings here so we have a better idea. We had this up move. This is again the weekly chart, and then we have this consolidation period, and then now we're breaking higher, and then now we're going to probably consolidate again before breaking higher. This consolidation down here, alright, let's just go to the daily. Alright, so I just guesstimated that one. It's right around here. So we may consolidate around this area on the weekly, and then before we head higher. Again, if the dollar's up, then the market's down, and if the dollar's down, then the market's up. And right now, the dollar is still in a clear uptrend. Okay, so that's just something you want to keep an eye on. Now be prepared, because a lot of institutions will like to release rumors. A lot of CNBC news is going to come out. Everybody's going to be bullish, especially after this move here. Get ready to short. This is obviously just my opinion. This is something that I'm going to be looking out for. All my shorts, all my longs are basically I'm getting out, or I'm already out. Actually, I have no long positions right now, and I'm getting ready to initiate shorts. I'm already out of my Seagate short, and I'm ready to get right back into the Seagate short again. So, just to give you guys an idea, right now after this move, I'm not jumping into the long side. I'm gonna wait patiently till it gets to the resistance level that I want it to go to, and then I'll initiate some shorts, and then hopefully, the markets will break out of this bottom trend line here, and then start its move down. Again, I'm still in the same boat. Okay, nothing's changed. If we get up to this 137.06 level, depending on the what time of the week it is, say we get up here and it's the ending of the week and it starts coming back down, I still say that this support level is going to be pretty significant, but now that we made this bottom pivot line here, then this is going to be another support level here after we hit the support level. So say we break down of this rising wedge pattern here, I expect at least a 50% back test to this bottom trend line here, if not an actual back test. I normally wait till 50% simply because a lot of times it heads down before it actually retests this trend line here. And so to me, I don't want to miss the train, but if you want to be safe, you can wait for the retest before it's heading back down. Okay, so that's just my opinion. This is what I see. This is what the chart's telling me right now. So let's get talking about some stocks here. All right, this is the infamous Walmart. This is the beast, the one I've been talking about for ages. And yes, I am still short on Walmart. We went right into this upper trend line here. Like I said before in the previous videos, I just initiated the short around here simply because I figured that it would already turn over, but it didn't, and went right into this trend line here. So I do expect a pullback. Even if the markets are strong tomorrow, I do still expect a pullback on Walmart because it's into major resistance in my opinion right now. It's at 73.18. I had a level at 72.92, 92 or 93 around this area here. So it's actually broken out of. So if we get a close above this candle here, then I'm out. Definitely out of Walmart. Take a small loss and then move on. Again, I went against my own rules. I tried to short a stock that's in relative strength, and that's a big mistake. Okay, and sometimes I like to gamble like that. But the number one, the rule of thumb is, you trade with the trend. The trend is your friend. If you trade against the trend, it's like swimming against the current, right? You don't want to do that. You want to swim with the current because it just makes life a lot easier. Okay, and then same thing with stocks. I mean, you want to short the weak and go long the strong, and the reason for that is if at any time the SPY or the S&P 500 or even the regular markets would just catch a small little bid, then these are the stocks that will be leaders. Okay, so you just have to watch out for that. All right, so I'm going to talk about some stocks. I'm just going to run through it as fast as possible so I don't take up too much of your time. This is a chart of STX. I was previously short right here in this area. You guys already know that I got out of my short around this area. I made about a good 20% off my options trade, which is not bad. I got out simply because it hit the bottom trend line and it went right into these calculated levels. And if you've been watching these videos, you'll know how powerful sometimes these levels can be. Obviously, nothing's 100%, and it has failed before, but for now it's been working out pretty well for me. So in any case, right now it's looking like it's gonna want to go back into this level or at least retag this upper trend line here. If it does that, then I'll probably be reinitiating another short on Seagate. Say it does that on Thursday or Friday, then I'll probably be shorting Seagate once again, and I'll tell you why. If you look at the weekly chart of Seagate, again, it's went right into this 20 moving average. You had this down move, and now you have this rising triangle here. Eventually, it's going to break down, in my opinion, and so I want to catch it when it does. It went into this 20 moving average. It may actually break out of this 20 moving average, but as long as it closes below the 20 moving average on Friday, then I'll probably be initiating a short. And the reason why I want to catch the short on Seagate is because I don't see another resistance point until at least there would be the major one, and the 50 moving average would probably have a bounce. But this is the weekly chart, so I'll probably be getting out of the Seagate trade as soon as possible. If anything, just one thing to keep in mind: Seagate does have earnings, and those earnings are on the 30th of this month. So I normally try to get out of all my trades during the earnings, or if there is earnings on a specific stock, I normally get out because you just cannot predict what earnings is going to do. Okay. Alright, this is a chart of rack space, RAX. This chart I'm still looking at because I still like it. On the weekly, we have these two calculated levels here. We also have this nice calculated level here, plus a 382 Fibonacci, and this 20 moving average at this 5201 calculated level. I don't like this 5201 level as much as I used to because of 20 moving average is already curving in, and the 50 moving average is right above here. So if we can get into this area here by the end of the week, then I'll probably be initiating a short on rack space. Let me just delete all the drawings here so we have a better idea and so we can see the pattern. We come down, we have this bearish consolidation pattern, and eventually, in my opinion, we should break down, and the next major support would be around here. So this is going to be a big move if it does come down. Okay, now if this somehow trades sideways or continues to trade sideways and this 20 moving average comes in while it does that, so let's just say it trades into this 20 moving average here, then I expect the stock to break down at that point there. So that's something that we need to watch out for. So let me just delete all this and then bring this 20. So if we consolidate right in here, then I expect it to come down just like that. Okay, and that's why I like the racks weekly, and this is what I've been watching for now. You just have to be careful. Racks also has earnings on next month on the 6th, which is not so bad. So we have some time on the racks trade, depending how fast we can get up to these levels. This is a weekly chart of Nike. I don't really like this chart as much, but I have to say that it's something that I'm definitely keeping my eye on. All right, so we have these three mathematically calculated levels up here, and we have these two mathematically calculated levels pretty close together, and a Fibonacci 382 Fibonacci retracement level here. So essentially, I mean, let me just delete all the drawings here. Okay, on the weekly, what we have is similar to the racks. Actually, let me just be a little bit more specific here. We had this down move, we had this bearish consolidation, and now we have another down move, and then we have another bearish consolidation. Now there is a possibility that we go and get into this 50 moving average before this guy breaks down, which is preferred. But you know, if after towards the end of the week is all the gas that I'm guessing this market has because of the volume, then you know it may actually turn over a little earlier. Alright, so this is the daily chart, and same thing, it's right into the 20 moving average, but I'm not so sure that it's actually going to break down from there. That's just you know, something to keep an eye on, simply because next week is already options X, and you know, this is, it's not too far away, so there's, you know, there's definitely a possibility we can get into this level, you know, in a single day. So again, timing is everything. When it comes Thursday next week, I'm going to see what stocks, whether it's Nike or Rax or whatever, is into their resistance, and then I take a short. So let's just say Nike breaks through these two calculated levels and a Fibonacci 382 and goes right into this level here where you have these two moving averages here, which I think is going to be prime. If we get here on Nike by the end of next week, then yeah, I'll probably be taking a short on Nike, and that's why it's on my watch list right now. This is a chart of Lululemon. This is a daily chart. Now, I had these two mathematically calculated levels here, which are pretty, was, I think it was like 1 cent off or something like that. And then we did get a bounce off of it. And we also had another supporting factor, which was this bottom trend line here. And that's why we're getting this slight bounce. Let me see if I had any other drawings in here. Actually, no, I didn't. So in any case, I haven't calculated. I don't know why this is on my watch list. Unless I deleted my calculations. In any case, what looks good to me is this 200 moving average. If we can get a bounce into this 200 moving average sometime to the end of this week, then I expect another down move. Lululemon is clearly in a downtrend, and it's clearly a stocking weakness, and this is something that I've been talking about. We want to stock in weakness or a weak stock to short, because you know, if the markets go against us, then these are the stocks that aren't going to hurt us as bad. As you can see, it only went up $1.15 while the market was up a whole $2.24, which is not really a big deal in my opinion, for the stock to only go up $1.15 when the markets were so strong. Okay. But you know, for Lululemon, I don't like it as much as the other stocks that I showed you previous. Okay, so this is a chart of the JJC, which is copper. This is the weekly chart. That's the correct drawings. I like the JJC here at this level here at the 46.54 or around this level here. We have actually, you can't really tell, but there's actually three calculated levels all in the same area. That's the kind of stuff I like to see, because it gives a little bit more supporting evidence that there might be a possibility of a reversal happening when we tag these lines here. And this is the weekly chart, so let me switch to the daily. Now this is the daily chart of Lululemon. As I'm sorry, JJC. As you can see, JJC chops around, right? It's copper, but basically around this level here is also the 200 moving average. So in essence, so I don't miss the trade when it gets into these two levels, then I'll probably initiate a short. Again, this is another stock that's in definite weakness. Okay, so you know, we have a downtrending stock here, and it's below, you know, the 200 moving average. So it's a pretty good stock, something that I'm keeping my eye on. This is a chart of IBM. Now this is you know, hard. This is going to be hard for me to believe that IBM is going to get a spike all the way up here. But you know, anything's possible. Definitely anything's possible in the stock market. But if we can get price into this level over here, IBM does move fast. So if it does, you know, get into this level here by the end of this week, then I'll probably initiate a short. Actually, no, I won't, because IBM has earnings on the 18th. Okay, you know what? Scratch IBM. I'm going to take this off my list. I totally missed that there's earnings. I will not trade at least, you know, around the earnings period, because you just don't know what's going to happen. So scratch IBM. Let me move to the next one. Before I move on to stocks, this is a chart of GOD, which is the ETF that tracks gold. I still have, and this has not changed, the 160, but the $160 level, 161, I should say 161 level here to initiate a short. Now, the only bad thing about this is because in order for price to get up to here, it needs to break out of this upper trend line, and if it does break out and it tags this level, then support will be at least 50% back to this bottom trend line over here, because that's normally what stocks will do. It will go up, it'll hit resistance and back test the upper trend line that it broke out from at least 50% before it goes higher. Okay. This is a chart of the FCX McMoran. Um, we have these three mathematically calculated levels here, right around the 200 moving average. It's also around this, I guess, somewhat of a double top, or at least in that pivot point. Again, same like gold. In order for this guy to get up here, we'll have to break out of this upper trend line. Okay, break out, test this resistance line, and then come back to retest the upper trend line there. I don't like it as much because resistance is so close. But you know what? In addition to that, I don't even think these guys will get up there. But if it can, because of manipulation, then I will. That's one thing I do like about manipulation, is because when you miss a trade, the institutions will probably manipulate it back, and then you get a second chance around. So a lot of people don't like manipulation in the market, but to be honest, it's been manipulated since the markets were even open. I mean, nothing has ever changed since then. It's understanding how the manipulation works and using the manipulation in your favor. And right now, next week is options expiration, and the reason why I have a slight upside bias is because there's so many puts on the options market being bought, meaning everybody's bearish the market right now. The institutions are going to prop the markets high as they can to get everybody out short and get them long before letting the markets go, and then they fall. And that's why you see volume being so low but yet price so high. Okay, that's how you can find. Okay, let me show you. I mean, you all have heard the term of head fakes, or head fakes are normally after a breakout, but you also hear the term of a bull trap. In my opinion, this is a bull trap, so be very wary. There's I'm not going to deny it. There is a possibility we get up to this 140, 136 calculated level up there. There's no doubt that it could actually happen, right? But as a trader, as a chartist, you just have to follow the charts and trade the way you see, not the way you think. But market manipulation will help you determine whether it's an institutional game playing or if it's legitimate. And right now, per this volume, it doesn't look legitimate to me. And so the institutions are probably propping the markets high right now. And that will give us a chance, because of the manipulation, to initiate additional shorts later on down the line. Okay. All right. This is a chart of CPRT. One thing I do like about CPRT is right now it's right into resistance, which is these mathematically calculated levels. Will it get a reversal? You know what? Actually, I should scratch this chart too, because we have these two moving averages right under here that could curve up and give this chart a little boost. And it is bullish consolidating here. You know what? There is a reason why I put this on my watch list. Let me find out why here. All right, this is the weekly chart. Let me just load my drawings back in. All right, so this is the weekly chart, and then so longer term, if you can see, it has a down move, and then it's bearishly consolidating for another move down. This 50 moving average will be a minor resistance. Okay, so that's probably why I like this chart. It's almost into resistance here, but again, the timing is just off. I should really remove this from my watch list, because if we may actually get a bounce off of that starting tomorrow, but being that it is options expiration, I really want to be wary about taking any short trades as of until towards the end of this week. And again, it's going to be one of those things where if the whole week is bullish, then I'll probably be initiating the short. But let's just say the first half of the week we're bearish, and then the second half of the week we're bullish, then I'm taking shorts. Now let's just say the first half of the week we're bullish and the second half we're bearish, then that'll put me at a neutral standpoint, and I'll have to reanalyze the charts to see what's going on. And a lot of times I do involve volume or volume trends to incorporate to see if it's a legitimate price or not. And what I mean, this is the last chart I'm going to probably talk about. Actually, no, there's also another one here. Okay, what I was going to say is what I mean by determining by looking at volume to see what's going on. I mean, it's simple. If you go to eBay and you buy something, and and say you buy a watch, and you see hundreds of people selling the same kind of watch, and then you look at the prices of all the watches. The prices, because everybody has to be competitive, everybody has to bring the prices down or around, or try to sell their watch with the same brand and same year and whatever, the same model. They all have to pretty much fight for price, and so all the prices will be be pretty equivalent or around the same, right? Because they have competition. Same like the stocks, and you know, you can consider that as high volume. You got 100 people selling the same watch. But let's just say you see one or two people selling the same watch. Can you really validate that that's the actual value of that watch? Not really, right? Because the volume is so low, you only got two people selling the watch. You really don't know if that watch is worth the price that they're trying to sell it for, right? But if you got 100 people selling this same watch and they all runs around say $50, then you can really determine that, okay, that maybe that's the going rate or the market rate of that watch. So the same like the stock, if the volume is low, you really can't trust the price that it's giving you. So that high surge in the SPY and low volume is an untrusted price, meaning there's not enough volume to validate that price. It's probably, you know, those one or two eBay people trying to sell and get you to buy in. And you know, a lot of times, not 100% of the time, obviously nothing's 100% in the market, but a lot of times low volume spikes like that will indicate a head fake, and everybody, all the professionals at least I know, are getting ready to short the market, not go long. Okay, so there's a big difference. This is a chart of Bed Bath and Beyond. Okay, so I'm going to move on here. We have the weekly chart. Right now, what I do see is a bearish consolidation. So if we can get into the $64 area, then I'll probably initiate a short. Bed Bath and Beyond is above its 200 moving average. It is sort of, you know, it is definitely a strong stock because it is in an uptrend, but it's definitely not a stock, not as strong as Walmart. Okay, so this could be the start of Bed Bath and Beyond's downfall. Alright, this is the daily chart of BBBY. You have this down move, and again, we're just consolidating bearishly over here. So if we can get into these three mathematically calculated levels here, say by the end of the week, next week, then yeah, I'll probably initiate a short on BBBY. This is a chart of Apple, and here's the thing about Apple. So we had this 612.34 level, which held up multiple days, which is pretty interesting, and then it pulled back all the way down to this 20 moving average. Almost a 20 moving average. The one thing you gotta be concerned about Apple, and every stock has its own personality, and the reason why every stock has its own personality is because people normally get attached to their stocks, and a lot of times they trade the same stocks over and over again, and everybody or every individual has their own personality. So obviously that's gonna make the stock have its own personality. So Apple's personality is, right now it's a very strong stock. Right now it's strong, relatively strong, but it is creating this big bearish pattern, and the bigger this pattern you know, starts making, the greater the fall will be. And Apple actually has earnings on the 24th of this month, so we'll just see what happens with Apple and during those earnings period. But in any case, let's just look at the charts and see what we see on Apple. Again, Apple's personality right now is it really doesn't actually hit. It comes close to their support and resistance line, but it you know, sometimes it pushes through like it did here, and sometimes it doesn't tag it, just like this 20 moving average before going higher. Okay, I still think this 612.34 level is a pretty strong level. Again, next week is options expiration, so institutions may pop Apple all the way up into the 657.42 level to get everybody long Apple. I don't know if it can get that high that fast, but it is definitely a possibility. I think a target price once it starts breaking down is at least at this resistance level here. Then your next resistance level would be down here, and that's if Apple starts tanking. Okay, so once Apple gives out, right, what we can do is we can get this level over here. A lot of people do this. I rarely do it, but sometimes I do, just to get a general idea of how weak this could possibly be. At breakout, or breakdown I should say, that's the estimated price that the possibility of Apple breaking down. And because markets are so symmetrical, then you know, it's not out of the question that this may or may not happen. All right, so we did create a doji candle here on higher volume. Okay, again, like I've been telling, like I always say, I need to see higher volume on a doji candle or a shooting star or hammer, whatever you want, any type of even engulfing or harami patterns. I really don't like haramis, but you know, for whatever the case, reversal patterns on candles need to be, in my opinion, verified or validated by volume, and that's what we got here on Apple, at least the past 3 days, right? Actually, this could be constituted as all the way back here. So to me, this is a pretty good indication that Apple may be turning over next week. But again, the caveat is options expiration. So we do have a doji on high volume. This is, again, the weekly chart, not the daily, so we may not see it immediately happen. But if we do break down somehow, and it could happen because of earnings, I don't know, Apple's earnings are per history been always pretty good, and they've always had a big spike after earnings. I've never seen it you know, have it doomed, but you know, anything's possible with Apple, and anything's possible with the market. So that's just something to keep an eye on. But if one of the big boys crashes, if one of the big boys do bleed out, the markets will bleed, and I'll tell you why. Because Apple is the biggest head honcho right now of the S&P 500. If Apple goes down, the S&P 500 will definitely follow, and the SPY, which is the ETF that tracks the S&P 500, will take a huge dump as well. So that's something that you might want to consider when you're thinking about going long. Okay, again, I'm not saying that the markets couldn't go higher. I'm just saying that for me personally, I'm going to get ready to initiate some shorts, and that's just my opinions. And that's pretty much all the time I have right now. So we're bleeding into 30 minutes. So this is your 7-minute market update. God bless you all. Good luck to you next week. Thank you for watching this video, and I hope to see you in the next one.